I think it's super bullish. Gold is clearly in a secular bull market. I think the price targets that you and I were talking about 5 years, at around $9,000, if you remember.
Yeah.
I think that's still the case. We probably have to revise them, and it's probably gonna go even higher. The only caveat would be if we see gold now really accelerating dramatically over the next few months and maybe 1-2 years, doubling in price immediately and running to maybe 8,000-9,000 in the next 1 or 2 years, then it would probably have the characteristics of more of a bubble. And we would have to be careful. But if it's just pushing higher like it's been doing now the last 14 months, I think it's very healthy, it's very sustainable, and we're going to see much higher prices. And this can last for at least a few more years, at least.
Gold's trajectory is increasingly confirming what seasoned analysts have long anticipated. The metal is firmly entrenched in a secular bull market. Prices are holding firm, with little sign of significant pullbacks, suggesting that physical demand is absorbing every dip. 4 major drivers are fueling this sustained momentum: global liquidity expansion, a bear market in bonds, record-breaking central bank purchases, and the unrelenting demand from China. Together, these forces are reshaping the balance of power in the global monetary system and accelerating the unwinding of the decades-old paper gold dominance. This shift is not just about price, but about confidence, sovereignty, and the future of money itself. Florian Grummes, a respected precious metals and crypto analyst, emphasizes that gold's move higher remains both healthy and sustainable. The current pace reflects strong fundamentals rather than speculation. Grummes highlights how institutional investors, facing persistent inflation and collapsing bond markets, are increasingly forced to view gold as the only viable long-term alternative. Add to this the geopolitical backdrop, de-dollarization, Chinese accumulation, and the building of gold-backed trade settlement systems, and it becomes clear why the trend has such staying power. In Grummes' view, the price targets of $9,000 per ounce once discussed years ago are not only intact, but may need to be revised even higher as the cycle progresses. With central banks and nations positioning themselves for a post-dollar future, the gold bull market could extend for years to come. Now, we present the clips from Florian Grummes' interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The Chinese, the Russian, and the Indian central bank are buying gold and not Bitcoin. The Americans desperately need something new to continue basically running their hegemony, and apparently they decided it's going to be the digital asset space. It makes sense to a certain level. At the same time, a digital dollar as a stable coin is just really much better. No, it's not. I mean, I'm very much worried about the whole surveillance kind of thing. I'm not sure if Trump himself really understands the whole thing. I think he has a lot of advisors who are telling him what to do and what to say, but if he really understood it, I don't know. It probably is the last chance that America can do, because they are not having enough gold. I presented my take on it. I think there's 4 big, very important macro drivers for gold. The first one, I mentioned it before already, M2, money supply, the liquidity basically in the system, constantly being expanded over the last few years, and especially now again in the last few months. And not only in America, but also in the Eurozone, in Japan, in China, wherever you go, basically. If you would look at South Africa or Brazil, you would basically see similar numbers. So liquidity expansion. Second big driver is the bear market in bonds, especially in the long-term bonds. So the long end of the bond market, I think the Fed has lost control over it already. We have still a rather persistent inflation. And if you're an institutional investor and you have to seek safe, conservative, long-term bonds, and now you're in a bear market in bonds, it's very challenging. So I assume more and more institutional money will go into gold because it's the only other asset that they can buy. So that's the second driver. The third driver is central bank buying. We haven't seen that in like decades, that strong demand from central banks. Of course, it increased dramatically since Russia invaded Ukraine, when the whole world realized, like, whoa, The Americans, NATO, the Europeans just can confiscate our assets whenever, however they want. So now lots of emerging market central banks and nations are trying to diversify themselves out of the dollar, out of the euro, de-dollarization. Central banks are buying gold. They don't chase gold, but they also don't really care about $100, $200. So that's exactly what we've seen over the last 14 months. Whenever there was a consolidation in gold, you didn't really have a big pullback because very quickly physical demand showed up in the market again. And the last one, which is also very important, probably the most important besides the central banks, is China. China is buying gold like crazy. The people in China are buying gold. They love gold. And the central bank is also buying gold on a consistent monthly basis, basically. China is the largest gold producer already, and they consistently buy more gold. They use this, of course, as a way also to attack America, because gold is the antidote to the American fiat dollar money system. And they plan to build gold vaults in many other countries.
Yeah.
So if they do their trade business with Saudi Arabia and they buy the oil from the Saudis, they will give them the renminbi, and the Saudis can take these renminbis, go in their own country, go to the vault, here's the paper renminbi, show me the gold. And I mean, this is what the Chinese are working on, to inject confidence into their yuan kind of system, building an alternative system to the US dollar system. And that's not going away. Those four drivers that I just mentioned, I mean, they're going to be around for the next 1, 2, 3 years at least. It could maybe take a decade or even longer until this fully plays out. And I think during that time, gold will be strongly supported. There will be strong physical demand. And out of the consequences also out of those four drivers is that you are seeing now the unwinding of that 50-plus decade Anglo-Saxon paper gold Ponzi scheme kind of system, right?
Yeah.
So we know that in the past five decades, the price making or the price finding for gold has been dominated by trading 200 paper ounces of gold for 1 real ounce of gold. That's how mainly the price finding has basically happened. And this is being unwinded now. And this can take a long time. And again, I just mentioned it before, gold is super strong, no real pullbacks here, no dips, people chasing, running behind the train. It just pushes higher, and whenever there is a dip, immediately big hands showing up with physical demand. And I think it's super bullish. Gold is clearly in a secular bull market. I think the price targets that you and I were talking about 5 years, around $9,000, if you remember.
Yeah.
I think that's still the case. We probably have to revise them, and it's probably going to go even higher. The only caveat would be if we see gold now really accelerating dramatically over the next few months and maybe 1, 2 years, doubling in price immediately and running to maybe 8,000, 9,000 in the next 1 or 2 years, then it would probably have the characteristics of more of a bubble, and we would have to be careful. But if it's just pushing higher like it's been doing now the last 14 months, I think it's very healthy, it's very sustainable, and we're going to see much higher prices. And this can last for at least a few more years, at least.
Markets today are defined by contradictions that leave both investors and ordinary citizens navigating an increasingly unstable environment. On one hand, vast liquidity injections by central banks continue to inflate asset prices across stocks, real estate, and even collectibles. At the same time, on the other hand, consumers face relentless erosion of purchasing power. Inflation remains persistent, not because of organic growth, but due to the non-stop expansion of fiat money. As a result, wealth preservation strategies are diverging sharply between the financially savvy and the average household. Those with capital to deploy into hard assets, whether gold, silver, or even niche markets, can ride the wave of currency debasement. Meanwhile, the majority struggle to keep pace, their wages failing to match the rising cost of living. The precious metals sector reflects this dynamic clearly. Gold has already demonstrated remarkable strength, but the real fireworks are expected when silver begins to lead decisively, a classic hallmark of bull market tops. For now, silver's steady but restrained advance suggests the strongest phase of this cycle still lies ahead. At the same time, recurring episodes of sudden panic, followed by miraculous recoveries fueled by new liquidity, show that the playbook of financial manipulation remains intact. This blend of stagnation, artificial growth, and inflation paints the textbook definition of stagflation, a scenario deeply punishing for the middle class, yet immensely rewarding for those positioned correctly in the markets. Let's get back to the interview.
So, I mean, there was a time when I was a hardcore gold bot, believing the end of the world is around the corner, and it didn't happen and played out. There was a time when I was like hardcore Bitcoin maxi, and it didn't really play out in that way. And in the end of the day, things played any time. I mean, who knows, in 10, 20, 30 years? Yeah, maybe. But there's also the risk that in 10, 20, 30 years, Bitcoin is just such an old technology and is completely outdated and not compatible anymore. And AI is running the show, and there's so much smarter, and they long cracked the code of the blockchain. Who knows? I mean, there's so many things you can come up. So how am I able to know what is going to happen in 20, 30 years? I, as a self-employed family dad with 2 kids and lots of responsibilities, I'm not able to put all my money on Bitcoin, believing in it anymore. I mean, I mean, Bitcoin has been life-changing for me. There is no doubt about it. But I'm, as I said, agnostic. And right now, what I see, Bitcoin is lagging a little bit. Gold is stronger this year. Gold is a fantastic bull market. And yeah, who knows? I mean, in the next cycle, if Bitcoin comes back down to 40, 50,000, I might tell you something completely different than today. But as I laid out before, I think right now, risk reward in the short term with the perspective of the next few months, maybe half a year, I don't really see a low risk. We all know that the official inflation numbers are rather questionable. So yeah, exactly, that's what's going on. On the one hand, massive expansion of the money supply, and not only in America, all over the world. If you look at these numbers for the European Union, if you look for on Japan, on China, everyone is basically printing money. And on the other hand, the consumers are losing the confidence in these currencies, in these fiat currencies, because they see that they have less and less purchasing power. And so people are trying to escape into hard assets. And that's why, at the end of the day, real estate is still holding up rather well. Okay, there is regional differences, but overall it's holding up well. And in many areas, actually, real estate is still getting more expensive. Your stock market overall, even though there's lots of questionable things happening in the economy, and you see that basically a stagflationary kind of scenario, the stock market is higher because people buy these stocks as an hard asset, so to speak, moving their money out of the fiat world. And gold, precious metals, mining stocks are moving higher, and crypto as well. And even your rare stamps and your old timers are getting more expensive because the fiat money is losing purchasing power and people losing confidence. I mean, you can see it in many countries, the society is becoming rather unstable. Some of them are actually close to a civil war. These are all the consequences out of it, and this is just continuing. You know? I don't see a turnaround here. It basically says that on the one hand, central banks, politicians, increasing the fiat money supply, basically printing money out of thin air, and on the other hand, consumers and participants in these financial systems are losing the confidence because they can see that the purchasing power of their fiat currencies is diminishing by the day in the end of the day. And that's basically happening at the same time. And what it means is your assets or your investments can go up on a nominal basis, while in real terms, they haven't moved at all. But people only look at the value of their assets in nominal terms, meaning in dollar. I mean, how many people are actually looking or calculating their net worth in Bitcoin and in gold ounces? It gives you a totally different picture over a 5 or 10 year time frame than just looking at it in terms of how many US dollars am I in total, or how many euros or Canadian dollars, right? So I'm doing this as a little homework every 4 months, updating a little Excel sheet, tracking my net worth, and you can see how challenging it can be actually to keep up in terms of Bitcoin and gold with your total net worth. You know, you might have more euros or dollars, but not more Bitcoin and gold. If we talk about the precious metals bull market, usually a very important long-term bull market top coincides with silver running the show. So we haven't seen silver really showing up and doing its own thing yet. It's been a nice uptrend. It's a strong rally, but silver is not like going completely nuts and berserk here. So the best part is still to come in the precious metals bull market. On the other hand, huge amounts of liquidity being controlled by very few people actually, and big trading companies, big hedge funds, big algorithms and bots. And it's always, I mean, remember in late March, early April, we had the stock market panic, Bitcoin tanked as well. In the final days of that sell-off panic, also silver and gold came under pressure. And then miraculously, a few days later, liquidity appears again. And 2 months later, stock markets are at a new all-time high.
Yeah.
And that's the playbook for the last few years. And I think this will simply continue. And from a macro perspective, we have a stagnating economy situation. We have basically no real growth anymore. And if it's growth, it's all artificially thanks to money printing or fiscal stimulus by the state. And on the other hand, if inflation remains persistent because of the money printing, and you put this together and you have stagflation, which is a terrible scenario for the normal people in the street. But anybody who knows how to play the markets can make a killing, because these moves that we've seen now in gold and silver, and which I assume we're going to see in Bitcoin in the stock market in the fourth quarter.
Yeah.
I mean, the Santa Claus and year-end rally is around the corner, usually starts around mid-October. So, I mean, if you know what you're doing in the markets, you can make a killing. But the normal people in the streets usually don't have that money. And they have no clue about the markets, and they're at the best case occupied with their beer in the evening and watching soccer games.
Yes.
Intensifying already since the financial crisis, right? And people with money, it's much easier for them to make more money.
Yeah.
While for the vast majority of the population, it has become more and more difficult to make a living. So it's very unfortunate, and that's why you see the escalating tensions within the societies everywhere, right? I mean, there's a few other reasons for that as well, but this is one, of course. It's very important. I mean, if a society is doing well in general, it's going to be peaceful and people live in harmony together. If everybody's fighting to survive, it's a totally different story.
Yes.
The global financial stage is shifting in ways that many still underestimate. Inflation, though often downplayed in official numbers, continues to erode real purchasing power, creating a silent tax on savers and wage earners. Simultaneously, central banks and large financial players maintain control through cycles of panic and liquidity injections, events that appear chaotic on the surface but follow a clear pattern benefiting those closest to the flow of capital. In this environment, assets that hold intrinsic value, such as precious metals, select equities, and tangible assets, become more than investments. They represent survival strategies. For decades, investors have trusted bonds, currencies, and the conventional financial system to protect their savings. Yet, confidence in these instruments is unraveling. With fiat money debasement accelerating, the shift into hard assets is not simply a hedge, but an act of self-preservation. Precious metals are once again proving their resilience. Gold remains in a steady bull market, with institutional demand reinforcing its base, while silver lingers in the shadows, holding back the potential energy of a much larger move. Historically, it is when silver finally asserts itself that the most powerful phases of the metals cycle unfold. That moment has yet to arrive fully, suggesting there is still significant upside ahead. At the same time, the widening wealth gap is reshaping societies. Those who understand capital cycles, inflation dynamics, and monetary manipulation can turn crises into opportunities, while the majority, locked into stagnant wages and rising costs, grow increasingly disillusioned. This divergence fuels not just financial instability, but social and political strain worldwide. What this tells us is simple. The next chapter of the global economy will be turbulent, but also full of opportunity for those who prepare. Stay sharp, stay informed, and if you found this analysis valuable, make sure to like, subscribe, and share your thoughts in the comments below.